April 29th. Again, I am off Thursday and Friday, so I'll have a show tomorrow. I assume I'll have a show tomorrow, unless things change. Maybe I won't have a show tomorrow, but we're going to go over a lot. First off, boner pills, I was wrong. Boner pills and weight loss can pay off, and we'll take a look at the chart. But HIMS is up. It went up crazy because they got a new deal with Novo Nordisk. The market yesterday was crazy. The VIX, we'll go over the CNN Fear of Greed Index, the bond market, blah, blah, blah. I'll go over my thoughts. Again, earnings matter. And so we'll look at the earnings per share from the S&P 500 historically. Brian Stoffel is very bearish. My shipping stuff kind of made sense to a lot of people, and it wasn't me that brought this up. This is just over the weekend. It's the overall narrative. Amazon, should you buy it? SPY is getting an 821 crossover. Roku, 7 days in a row after Bank of America upgraded it. Paid members of the newsletter, I suggested an liquid natural gas play. We might be screwed on that one. Then we'll do a scan from TrendSpider relative performance. We'll go over earnings, energy plays, some of the earnings stuff that's coming up. Stock spotlight on OKTA, and a little rant to close, but earnings is going to be the main focus. Let's start out with Liberation Day, because one of the things today is his 100th day in office, and it is the fifth worst start 100 days to any presidential term. It hasn't gone well. I mean, by any, market participant, it hasn't gone well. And I'm saying market participant because you may be all behind this. You may be totally in favor of this. I am in favor of some of the outcomes that are desired, I should say. I'm just not in favor of the process, the chaotic kind of thing. And I've gone over it before, but Liberation Day strategy, you're still not back in. Now, knowing the formula, I will tell you it's not very close to back in. But this doesn't time the bottom and the top. It back tests, okay, over the last 9 years. We can bring it back to the last 9 years, and I'll bring it back and I'll show you. This strategy during COVID saved you 20+%, 25. During the 2022 interest rate hike, it saved you 35%. During the dot bomb of 2000, it saved you again. During the financial crisis, it saved you. During the 25% Liberation Day tariffs, it has saved you 25%. Okay, from top to bottom. Doesn't mean that from top to entry, because we don't have an entry. Now, if you look at the 2022, it saved you 20% there. If you look at the entrance on this one, and we just pull it back, it saved you 9%. During that one. But from top to bottom, again, I've been pointing out, I don't think that you wait for the entry on this one. You start adding in. But if you feel uncomfortable adding large amounts, then once it gives you the actual entrance, that's when you go in. So during this time, again, I back tested it during all of those times, and it's the Liberation Day strategy. It is based on a weekly candle. So it's very, very long term. That's why I back tested it for 9 years. It goes back, even you can see, it goes back here to 2015. Okay? January 2016. 2016. Thought it was December, but it's 2016. Goes back there and it starts and it enters you in April 25th, 2016. And you get a nice 52% gain all the way through 2018. That was during Trump's first presidency. That was great. Then during 2018, during the first tariff war, it saved you because you got out at 4% gain right there and you got back in at 163. So it saved you. Again, it is a technical strategy. It's not perfect, but it back tests really well. 9 years, 14 positions. That ain't bad. There's 14 positions in this chart right now. If you want this strategy, okay, go to the link tree. The link is down below, linktr.ee/daily stock pick. It is the top link. You'll get over to TrendSpider. Now, here's what you can do. Say I got a message from somebody who wanted TradingView yesterday on Spotify. And they said, yeah, I like TradingView because it's less. TradingView, I have used it before. It is too complicated for me. It doesn't work easily. and they are limiting you unless you get to a top tier. TrendSpider, it is that top tier, but it is so much simpler. Here's what I'd like you to do. If you have TradingView, spend $20, $20. Try out TrendSpider for 2 weeks. No, you don't get my 4-hour algorithm. No, you don't get all the watch lists. No, you don't get all the scanners. But I have some free ones that you can import. Okay, on my newsletter, just go over to the newsletter, go down here, back to the link tree, you go to my newsletter, and there are some free strategies that you can import. Okay, in TrendSpider. It goes back, I think I did it last week at some point in time. It last week or something, I put in a couple of that you could import. But again, it's very, very simple, and it's common language that you can do to actually import to create strategies. And for $20, it's worth your benefit just to try it out. So go over to my link, try it out, send me an email, let me know. I can give you the 65-minute algorithm. I'll try and give you whatever you want if you're on a 2-week trial. But let me talk about, before I put it out there, Mr. Beast had this great idea yesterday, 100 men versus a gorilla. And yes, that is me. That is not spam. I said, pick me, pick me. I'm 54 years old. Then I thought about it as somebody simulated. It's not good. They simulated a gorilla against 100 men. It's not good. I'm regretting my signing up for it. He didn't pick me, thank goodness. But it's out there. I signed up. I'm not crazy. I stepped over, I just thought I was younger. Even younger. I mean, it's going to beat the hell out of 100 men. I think it's hilarious. I was laughing hysterically when I saw it, when I saw that one. Now, I'm going to put this out there. I always say journal your trades. Know when you're going to sell the top and the bottom before you trade. And if it's investment, identify that, blah, 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 blah. If a stock drops after you buy it, you got 4 choices. Pick your fighter. Go and comment on my on this one. Do you try and buy the dip if it falls after you buy it? Do you hope for the best? That's number 2. Do you sell quickly to minimize your loss? Or do you wait it out? I have done all 4. But when I tell you to journal your trade and identify this before you get in, you're not guessing. You know what you're going to do. So if a stock drops after you buy it, yes, I bought Meta at 570. Yes, I bought Meta at 600. What's Meta today? Let's go and look at it in the 4-hour algorithm. Meta right now is 549. I am losing on both of those trades. I am perfectly fine losing on both of those trades. Excuse me. I'm going to take more water. I am perfectly fine holding on to those because the valuation in my mind makes sense. Okay, I'm about to get those damn Meta glasses because my friend John is in Shanghai doing live on Instagram. Just amazing, amazing quality. And it's fun to watch. It's amazing to watch. So I like it. But again, you have to identify which one you are. We're not all the same. There are different people that will do different things with the same exact stock. That's my point of pointing this out. Now, boner pills, HIMS and HERS. HIMS partner with Novo Nordisk to offer Wegovy through direct to consumer. Direct to consumer. That's huge. Remember, I told you I wasn't a big fan of HIMS because it's a marketing agency, essentially. Well, I watched Martin Shkreli yesterday. He said HIMS. I'm not shorting HIMS. HIMS has every sign of a good business. Now, Martin Shkreli is a guy who shorts stocks. Okay, HIMS surges on the partnership. It was up 50%. Let's see what it is right now. It's down to 29. So any reaction is an overreaction in the market. But this makes them legit. It makes HIMS legit. No longer is it a compounding pharmacy. They're going to do direct to consumer, and that gets Novo Nordisk back in the GLP-1 mark. Now, over 1 year, Novo Nordisk is down 50%. They are one of the leaders. Okay, Eli Lilly is going to go after HIMS and say, no, you can't do our compounding. Novo Nordisk is like, hey, take your marketing and let's do this together. I like this. I like this partnership. I like that it makes Novo Nordisk back in the conversation. The valuation is still stretched. And why? Well, we can analyze with AI. And we can go in here and we can say, okay, why is the valuation stretched? Mixed valuation landscape. While its forward PE of 15 is discounted relative to the sector of 24. That's typically what I look at. Its price to book ratio is significantly higher at 9 compared to the sector of 2. I'm fine with that. So that's not a minus. Now, momentum, the stock momentum sucks. Yes, within 1 year, price performance decrease of 50%. This changed the game. Revisions, earnings per share are concerned with 4 downward revisions outnumbering 1 upward. I'm fine with that because this changes the game. Now, does it change the price? Probably not. Wall Street says it's worth $93. There are 12 analysts that cover this. That's a 50% upside. Now, they have brought it down. It could continue down. Just understand, I think this partnership changes the game. Okay, let's talk about the overall market. Seeking Alpha's market indicator shows neutral short-term outlook on stocks. We're going to go over QQQ. I just use QQQ because that's the index that I prefer. You can use SPY, you can use VOO, you can do whatever you want. I use QQQ. What I want to show you is a 5-minute chart of yesterday's price action, okay? That 471, we identified that one as a long-term support level. And yes, it bounced off there several times in the pre-market, okay? But yesterday, we broke down off that support. And it just shot straight down in the middle of the day. Yesterday, everybody's claiming, oh my God, it's the end of the world, blah, blah, blah. We were down by 2%. It's starting again. We're going to give up our gains. And then the strong buying into the end of the day. It was a good afternoon. And that poses a good opportunity for continued upside. Okay, but the VIX is down. It's not super high, but the VIX is at 25. It's in that no man's land. If it were at 30, I'd be telling you buy. If it's at 20, I'd be telling you, hey, let's hold off. Maybe something's going to happen where the VIX is going to go back up. Remember, when the VIX goes up, the market typically goes down. And you can see this over the last 6 months. When this spike, this was tariff day, and we've been coming down steadily. But at 25, you want to, if you're sitting out this market and you're 40% cash, okay? I'd tell you put 10% of that back in. At 25, put 10% of that back in. Because you don't want to miss out on the market. I'm going to say something absolutely crazy right now. But I don't think we get back to all-time highs this year. Now, that would mean that we would get back to the 540 level on QQQ. I don't think we get back there. I heard some people yesterday making sense about the market. So let me say this, okay? I'll explain this. The market is a forward-looking mechanism. That's why I said yesterday, you buy during the recession. You don't wait until after the recession. You buy during the recession. It's never too late to buy, but you buy when things are down. Not necessarily the bottom, just down. The chatter I heard yesterday was the market is looking to 2026, not 2025. It's not pricing in the worst case scenario of tariffs, but it's rather waiting for earnings. So I'll take it back to the earnings. If the economy is expected to grow, right now it's not. The Fed is anticipating, I think it was the Atlanta Fed, said GDP is actually going to go negative. Then the market will look forward and not put an 18 multiple on the S&P, okay? At a multiple of 20, the market thinks the S&P will be $276 of earnings. That's what it did yesterday. In my opinion, that's too high. 276 is too high. So I just went out there and I said, give me the S&P earnings. And you can see by quarter, The last one, $57. Times $57 by 4? Do you get 270? No. No. So how do you get the multiple? You literally take the S&P at 5,528, divide it by the estimated earnings. Okay, instead, I took 5528, divided it by 20, which I assumed might be the multiple. That gets you to $276 in earnings. Okay, so the multiple in my mind is a little too high, but it's looking forward. Again, the market is a forward-looking mechanism. And if you just do that, it's too high. So does that mean that we have to come down? No. Because if for some reason you get Trump 1.0 and he's like, we're going to fire on all cylinders. He's talking about lowering the auto tariffs today. What do you think that's going to do? So I just want you to be prepared that, yes, the market could come down. Brian Stoffel, he is a former Motley Fool writer. He is fantastic. He did a presentation yesterday, 11 minutes of your time. It's worth watching. This is a man who took his money out at almost the exact time during COVID. Why? Because he saw things in the marketplace. And then he changed his mind at almost the exact time in March during COVID. He timed it. And he's seeing things in this market that he doesn't like. He is at the largest position of cash since COVID. And so it's worth pointing out. Do you sell out of it? No. And what you take away from Brian is he's 20% cash. He doesn't like being 20% cash. I don't like being 20% cash. I was 40% cash. So you take it that we're still in the market. You can look, we are largely invested, just like Buffett. We're largely invested because the market, you have to be involved in the market during those days when it goes up. You can't be out of it just because it's going down. But this is an 11-minute video that I think is fantastic. And FYI, he reiterates what I said yesterday, shipping is concerning. If you all of a sudden get consumers, which is 70% of our actual economy, who are worried because store shelves are empty, I don't care if it's May, I don't care if it's June, but if that happens at all, you could see a downturn in the economy. And then you could have stagflation because what's the Fed going to? The Fed ain't going to lower rates if you've got higher inflation. And he goes over it perfectly. So understand that. The charts are mixed, but they look bullish. Okay? Hammer on the chart, cross on the MACD, choose your fighter. Which one are you doing? The hammer candle's bullish, the cross on the MACD is bearish. Which one are you going to do? These are monthly charts. These are monthly charts. Are we too high? Maybe. But I wouldn't pull out. You know, Tyreek Hill doesn't pull out when he gets a new baby mama. He got to pull out, he got to pull out. Don't pull out. Trim if you must. Maybe that Liberation Day strategy works for you because it got you out at a very good time. Okay? It got you out at 5:30. Remember, the highs were 5:40. It got you out at 5:30 on QQQ. And it back tests well. Have a plan. Talked about, the first one. Do you get out? What do you do if a stock goes down? What kind of trader are you? So just understand, things still look bullish. You're on the verge of your first 821. So moving averages, this is a very classic, moving average strategy. When the 8-day crosses up on the 21-day, it's bullish. That's a very common strategy. And you can see up here on SPY, you've got higher volume levels up above. If you lose this, then you have to go down a significant way. So, what stocks are you going to buy? Should you buy Amazon before their earnings on April 30th, tomorrow? Should you buy them? Steve Kress, Amazon stock has tumbled more than 14% year to date, is down more than 22% from its high due to tariff fears and an escalating trade war with China. Now, you should read this. If you are going to invest in Amazon, you should absolutely read that story. Amazon is right at that 188. Now, what's 188? I have identified this before. It is the 2021 highs right there in July and November. And it provided resistance in April. It never really provided support for a couple of weeks here in March. It provided support, but it's been pretty clear resistance right here. Okay. We will look at March 31st. What's the high? 198. What's the open? 188. What's the close? 171. Here is April 7th. What's the high? 192. Open 161. You were up 14%. That's the, hey, we're going to pause stuff. That was that week. And then April 14th, what's your high? 187. And then this week, what's your high? 189. It is literally bouncing off of that 188, 189 realm. And so you're right there. What do you want to do? I think you want to buy. I think the MACD is super low. The RSI is at 44. I don't think that the valuation is overstretched. Yes, it's a D, but historically, this is very, very cheap. It's a hold in the quant. Wall Street says it's a $244 stock. They have chased it down a little bit. It's going to be all about the guidance on Thursday. Steve Kress puts it in there. Do you want to buy that? I posted yesterday the Seeking Alpha 10 stocks, the top 10 stocks. Okay. 5 of the 10 are positive. 5 of the 10. There's one up 35%. There's one up 21%. There's one up 20%, another up 10, another up 3. Yes, the bottom ones are just down as much. But that's pretty damn good picking 10 stocks and having one that's up 35% year to date in a market that's down 6%. That's why you get Seeking Alpha Premium. And you can go over here and it's the third link. You can get the bundle. The bundle, you save $159 off the bundle. But I will tell you that, let's see right now, right here. Join Seeking Alpha Premium and get the next Alpha pick for free. So if you use the third link on my link tree and get Seeking Alpha Premium, you save $30 additional dollars. You get a free 7-day trial and you get the next Alpha pick. I think it's on the 15th of May. You don't get the May 1st one. You get the 15th of May. So if you want to wait for your 7-day free trial and sign up, on the 13th of May and get the free trial and the $30 off and then just disconnect, do it. Try it out. I urge you to try it out because the top 10 stocks, I have a list. I have my watch list right here. Top 10 2025 stocks. And I have them so I can watch them and I can set up alerts. Okay? It's a good list. Now, Roku, you may not even think about Roku. You may have a Roku device in your house. Bank of America last month upgraded Roku to a buy rating. And it is 7 straight days of gains. Okay? 10% over one, down 10% over 1 month. But when you go to 6 months, it's down 10%, year to date down. But 1 year, it's up 16%. That's pretty good. That's not bad in this market. Again, over the last 7 days, it's doing really well. 5 days, it's up 6.44%. Now, what's a strategy that works on Roku? Maybe you want a technical strategy that works on Roku. The 4-hour algorithm makes you 27% versus buy and hold makes you 6%. Okay? It's based on one thing. I will tell you, the weekly right here is very much like Snowflake. And I have identified this one as a trade. Okay? Right here at 70, it very well may pop to 107. It very well may pop to 107. What's the Wall Street target? $90. That's still 33% above. It's a buy in the quant. You can go and read Analyze with AI. Again, if you have the Seeking Alpha Premium, you can get this analysis with AI. Competitors, Amazon, Google, and Apple, because they're an advertising service, Valuation is mixed. EV sales of 2 is slightly below the sector median. However, the price to book is significantly higher. Now, what do I like to look at for valuation? I like to look at PE. They're not making money. I also like to look at PEG. They're not making money. But their growth is impressive. 18% revenue growth year over year. Okay, but they're not making money. So that may not be a stock that you like. I posted for paid members of my newsletter. I said, hey, maybe liquid natural gas is a good negotiating tactic for the Trump tariffs, because they're going to go to Europe and they're going to say, hey, you got to buy more American natural gas. Screw Russia. Nord Stream, that was a mistake. This has stuck in Trump's craw. Well, what's the best stock to benefit from that? LNG, Cheniere Energy. Okay, I only know that because I researched it and I traded this during the beginning of the Ukraine war. It was a fantastic. They were basically exporting $15 natural gas. I think it was per therm or something like that. I forget the metric, but it was $15. And they were selling it in Europe for $150. The problem was there wasn't enough infrastructure to actually accept all that we could export. Now, I posted it. I will tell paid members, you might have a problem with that now, because it's impossible for them to comply with the Trump rules on Chinese ships. Again, unintended consequences, because this is part of Trump's big thing, the energy dominance. So will they fix it? Most likely, yeah. Most likely they will. Now, you want to know stocks that are going up, that are defying, that the relative performance of the market? Here's a scan for you in TrendSpider. You can log in and import it. Okay, right here. And log in and import. It's called the, relative performance better than 95. And when you log in, click here to open it. It comes up with all of these stocks. Now, we're in the 4-hour algorithm. Let's see if some of these work. DoorDash, you make 94%. Buying and holding makes you 200%. Maybe you want that one. BSX, Boston Scientific. The 4-hour algorithm makes you 51%. You win 40% of the time. Not bad. Take Two. Not great on that one. HWM. This one, Howmet Aerospace. 142% on 23 positions over 24 months. You win 48% of the time. That might be one that you could take. Again, it's going up in a down market. RSG, which is Republic Services. This one makes you 56%. These are relative performance gainers. McKesson, which is the spices. T-Mobile, which we talked about the earnings. This one got you, the 4-hour algorithm got you out. Maybe you want to get back in. Maybe that one's turning around. Cencora. There's a ton of these that you can go over. Again, GEV, which I think has earnings later today or something. No, they already had their earnings. This is GE Vernova. This is the energy portion. This one, the algorithm got you in at 309. It's at 370 right now. CrowdStrike. This one I bought here at 360. Okay, it's at 422. That was on April 9th, not even 20 days, just 20 days ago. Great buy. I saw it on relative performance change when it did this bounce, and I saw the buy on the 4-hour algorithm. The 4-hour algorithm in CrowdStrike makes you 244% versus buying and hold makes you 211. I'd be happy with either one. But the 4-hour algorithm wins 61% of the time, 23 positions over 24 months. That is my mojo. The average win, 12%. I am looking at 12%. I am looking at it. I bought this to buy and hold. I like it. I like it under $400. They're heading into earnings that are later in June, so they don't have a catalyst coming up. But, it is one of those that could pull back big time. But I want to own a stock that will shut down the world. Now, you might say, what is relative performance? Well, I'll show you, because I didn't exactly understand it, but I went to Perplexity. Use AI. Relative performance of a stock measures how the stock performs compared to a benchmark, such as the market index. And yes, they do it to the S&P. You can look at the formula. It's typically calculated by dividing the stock's price by the benchmark price and tracking this ratio over time. If relative performance line is rising, the stock is outperforming the benchmark. That's what that scan does. So it's outperforming the S&P. You want that. Relative performance helps investors identify market leaders and laggards, especially useful during market swings or when comparing stocks. You could turn this around and say, hey, let me find a laggard that's underperforming that should be outperforming. You can do that in TrendSpider. Plain and simple language. Okay? I'm going to talk my own book here because I bought Meta. During that shut up and buy time when I told you, I bought Meta. Well, what's TrendSpider telling us? It is strong for the last 10 years during these 3 weeks. Okay? 70% win rates. And you can do this for any stock in the portfolio. You can look at the seasonality of this. If we look at the week of the year, and we're going to take this back, let's take this back to 2012. Okay, 13 years. Look, the 3 weeks that are greatest are this. Now, when you get into June, May, it might be a little weak. The weakness is when you want to buy, okay? I would say this was the week that you wanted to buy. That's the week when I bought. Buy it. Meta is just one of those. I think you want to buy it. Now, Mastercard got into stable coins. Here's the logic for anybody that doesn't understand stable coins. Here's my understanding of it. Stable coins, basically, they track the US dollar. But what stable coin owners can do is take the assets under management, which for Circle, which is, owns the USDC, which is the US dollar one, they can take the assets under management, say it's $5 billion, and they can buy treasuries with it, okay? They have to be semi-liquid, but they can just buy treasuries. They can buy the Japanese yen. They can buy whatever currency they want, but it's usually U.S. treasuries that they buy, and they collect the interest, okay? That 4% 10-year bond, they're buying that. They're making 4%. What's 4% of $5 billion? A shitload of money. That's what stablecoins is. Well, what does MasterCard do? MasterCard unveils new stablecoin capability for merchant settlement. They'll be able to trade currency with stablecoins. I like it. And it's through PayPal. So MasterCard is working with PayPal. It's a good one. Again, Visa and MasterCard both report earnings. Here's what to expect. Visa reports after the bell today. Is that one that you want to buy? I don't know. I mean, let's take a look at it. 337, it's at the upper part of its 52-week range. Wall Street thinks that it's 10%. 374 is what it's worth. The quant says hold. Why? Because of the valuation. It's expensive. So for me, not my thing, but I thought I'd bring it up. Now, maybe energy is your play because energy is depressed. It's depressing. The world is currently engaging in the biggest rat race to dominate AI. I saw this yesterday. The biggest names, including Stanley Druckenmiller, David Tepper, Soros, Buffett, Icahn, even Nancy Pelosi are buying energy because we have to fund and we have to fuel AI. That's what they're doing. And so you can see Stanley Druckenmiller, Nancy Pelosi, and Tepper added VST to their portfolio. Is VST one that you want? Let's go look at VST. Do we have a strategy for VST? Well, the 4-hour algorithm makes you 329%. I'm perfectly fine with that. 20 positions over the last 24 months. If we look at a weekly on this one, you can see Pelosi bought right there at the freaking peak. Okay, VST, if you just bought when Pelosi bought, you're losing money. So if you think she's one of the greatest traders, look at the weekly on this one. The MACD has reset itself. The RSI is down at 49. Is it down low enough? Well, let's go look at the valuation of VST. Is it expensive? You bet it's expensive. It's the leader. And everybody's bringing their earnings down. The growth is still exceptional at 16%. Now, I said, hey, what are the energy stocks that Druckenmiller, Tepper, Soros, Buffett, Icahn bought in the last 4 months? I didn't rely on this one because I always want to, prove it a little bit. Well, it's Champion, CHX, Energy Transfer, VST, NEE, NextEra Energy, Sunrun, and Buffett, of course, bought Oxy. And Oxy has been a loser. So maybe you want to go into energy and look at that. But again, I did the research. I own MPLX. MPLX I'm perfectly happy with. I brought MPLX up many, many times. It is part of the core portfolio. It is a stock that just continually, it paid that huge dividend, and then we got the money back. You had another backfill. Same with Pilgrim's Pride, another one that I brought up. Now, I'm going to go over a stock spotlight here. OKTA. The reason is OKTA, it's an alpha pick. And remember, I went over alpha picks. You can get premium with alpha picks. You get the next alpha pick if you sign up for Seeking Alpha Premium. Just use the link tree. You can use any of these links. If you just want alpha picks, it's that fourth link right there. You save $50 when you click on that link. Okay, but OKTA is an alpha pick. And it might be growth at a reasonable price. Oh, I wanted to bring that up. It is actually, let me just open this one up. It is joining S&P Midcap. Now, what happens when a company joins the S&P Midcap? If they are growing fast enough, they will join the S&P Large Cap 500. So it's a process where they basically go up. OKTA may be one of those that's actually joining it. You can see the chart right here. Okay, this is Berry versus OKTA. And Berry is just one of those that's coming out of the S&P 400 to make room for it. Now, this analyst says that OKTA Zscaler in focus as JP Morgan checks in ahead of earnings. OKTA and Zscaler were in focus on Monday as JP Morgan checked in on the few of them. Okay, for OKTA, analysts at the firm said they have heard positive tone on the shift towards sales specialization. You can go and read this. But let's look at the chart of OKTA, okay? We can look at this one. The 4-hour algorithm makes you 20%. Buying and holding makes you 33%. It wins 43% of the time. This gap right here on earnings, that was just a bad earnings. Then you had a gap up here on earnings, the last earnings. What do you have coming up on May, later in May? I don't know. But it seems like this $98 might not be a bad price to buy it. If we go in and look at a weekly, is it stretched? No, it's just hitting that 200-day. And I've shown you before where this $72 is a price to buy. Now, OKTA is up 4.5% today. This analyst says growth at a reasonable price. Maybe it is. So I just bring that up as hey, it's a highly volatile stock that could offer a strategy. Maybe Zscaler is more in your line, but go and find a stock like this. Go and find a stock that you're comfortable with, that you want to take a chance on, because now is the time when you want to take a chance on some of these stocks. And I point out that at this $70 mark, when it got down here in October, did you buy? You know, right now, the 50-day at 87 is providing some support. Set an alert at 87. If it gets down to 87, go and buy it. Now, let's look at some earnings. Spotify. You may be listening to it. Tens of thousands of people listen to me on Spotify. I am a super fan of Spotify. I own Spotify in my Webull portfolio. And I've said it before. Webull is my betting portfolio. I own like 5 stocks: Apple, Google, iBit, Nvidia, Spotify, and Tesla. That's my entire portfolio. And you can see this started out with $1,000. It's now $10,500. Okay, $10,500. But Spotify missed. I own Spotify in that portfolio. The key point I want to point out to you is total premium subscribers was up 12% year over year. That's pretty damn good. Now, if I look at Spotify on the quant rating, It says it's a hold. Why? Valuation is expensive. They're not making money. And even the PEG ratio is super, super high. So I'm not a super fan of it. But when you're growing that much, when you look at growth, 18% year over year, EBITDA growth, 18,000%. The stock price is going to go up, and it has been on fire. Now, Wall Street thinks it's a $672 price. Okay, that's 12% upside. You can see right here, the 52-week range, closer to 600, you should be trimming. Now, I'm just buying and holding because I started a position. It's not very old. I think it's in the mid 500s, somewhere in that neighborhood. It might even be even lower because I think I started the position probably late last year. So it might even be in the 300s, but it was identified as a buy and hold. And I'm perfectly comfortable with sitting through a 6% downturn on earnings that I don't think were that horrible. They're just, it's okay. It's okay. People may be pulling back. Another earnings, SOFI, killed it. This one in particular, over 1 month, up 9%. 6 months, 17%. Year to date, it's down 14%. 1 year, you are up 87%. Buy and hold wins on that one. But I identified this one as a $10 stock. I'm not comfortable holding it over 10. Do I want to buy it at 8? Absolutely. Now that it's up at 14, I'd buy it at 8 again. Will I have a chance? I don't know. My particular play on some of the finance stuff, it's Hood. It's Robinhood. Yeah, I've been converted. Another finance play that did well, PayPal. PayPal is the top stock in one of the top 10 stocks from Seeking Alpha. They actually did really well. We can go over here to Earnings Hub and we can look at PayPal. Where's PayPal? PayPal right here. You can see the earnings per share, 14% beat. It was the revenues that were okay. It's up 1% in pre-market. Now, one that I really, really like is a GLW, Corning. Look at that. They beat earnings per share by 5%, revenues by 1%. Let's go look at GLW. GLW in pre-market is up 1%. I like this one down here. That price of 46, I thought it was going to provide support because look at all that support right there. Where's that come from? It comes from the 2021 previous high. And so I want to buy under this. And it just got over its 50-day. And you can absolutely look at that 50-day as potentially turning around. Another earnings one that actually beat. We can go over here. It is an alpha pick. Royal Caribbean. Earnings per share, 6% beat. Okay, revenue down slightly. It's an alpha pick. And when you go and look at this one, Royal Caribbean, let's pull it up here. Royal Caribbean, RCL. Okay, you may say, well, the run has happened. Look, it's in the middle of its 52-week range. Over 1 year, you're up 50%. Year to date, you're down 6%. In pre-market, it's up 3%. People are freaking cruising. Okay, so earnings today, let's look at the earnings after the bell. Like I said, you've got Visa. They're expected to do $2.68 per share. Last time they reported $2.75, $9.55 billion in revenue, $9.51 reported. Is it good? Not in my wheelhouse. Starbucks is one. That's an $83 stock. This one shot up and was looking like the winner of the year. And then boom. China, the China war just killed it. The American brand in China has been beaten down. Starbucks has a big presence in China. So they've got earnings. Are they going to announce something crazy? Remember, they've got the Chipotle old CEO. I like him. Am I buying the stock? Nah. I'm just, for me, I don't go to Starbucks all that often. The valuation, little bit extended, nothing crazy. We can, analyze it with AI. It's PE is 27. When you analyze with AI, it tells you Starbucks appeared overvalued with a PE ratio of 29, significantly higher than the sector at 15, indicating a costly stock. Now, who are their competitors? McDonald's, Dunkin' Brands, and Dutch Bros. Dutch Bros, BROS, this one has just been killing it. It's expensive. Over 1 year, you're up 117%. So you've got those coming at. And then tomorrow morning, you got Cat, ADP, Etsy, GE Healthcare, Wingstop. Tomorrow afternoon is the big one, Microsoft and Meta. That's where we start getting it. And you've got Robinhood. You got Robinhood. Robinhood always does crazy stuff around their earnings with product announcements and shit like that. And then you have some of the one of the biggest nuclear ones, CCJ, Cameco. They're expected to, they beat their earnings last time by 13%, and they're expected to go down this time. So now I'm going to end the show. If you don't want to hear this rant, don't listen to it. But I'm closing the show because I was kind of outraged at this. Don Jr., and again, there's nothing illegal about this. There's nothing. It sticks in my craw. And at least the Bidens tried to hide their grift. I mean, from launching 2 meme coins to buying a crypto exchange and sitting on the boards of companies that are applying for federal permits, his son just opened up a $500,000 membership club in Washington, D.C. Okay, it's clearly not illegal. I am not saying it's illegal. It just leaves a bad taste in my mouth when a family is profiting as clearly as it is from a presidency. I'll leave that for your own opinion. It's just my rant. I'm just stating the facts. My opinion is it shouldn't be allowed. I don't think that this is right. There is nothing illegal about it, but morally and ethically, I think that it's wrong. Now, would I be doing something like this? Probably not. I do the podcast as a service. I could make more money trading. There's a difference there. Now, do I think that they're doing something for the good of Washington, D.C.? I don't think so. I mean, even, again, it's basically a VIP hangout for tech bosses, crypto millionaires. And yeah, it just feels dirty. So again, we're only 100 days in. And so far, they've launched 2 meme coins. They've bought a crypto exchange. And they're launching this. And he sits on the board of several companies that are applying for federal permits. Just feels wrong. I'm just saying. And you can hate me and you can hate my opinion. Just feels wrong. But there is nothing illegal about it. I am not one of those people who's going to show up and protest about this. I am just saying it feels wrong. And if you can, come at me and tell me that this is right. Let me know that you think this is the right thing to do. That morally, that this is absolutely something that should be done. And I'm not saying the Bidens did it right. Bidens were just as dirty as everybody else. I mean, that's very, very clear. But at least they tried to hide it. I mean, it wasn't out there in the open. Yeah, they were doing it illegally behind the scenes with Hunter telling the Chinese, the big guy. But I'm not saying anything's right. I just would hope that we have some type of president that comes up at some point in time that doesn't have conflicts of interest like this. At some point in time, I'm hoping. So, again, just my rant. I hope you tuned out for that one if you are a MAGA head. But we have earnings. We've got big stuff. Again, I don't think we're hitting highs by the end of the year. I think we're range bound. I think you are tapped out. I do think that you get some type of bounce if we get some that big beautiful bill that they've talked about with the tax cuts and things like that. If you are able to get that through, and it is a Herculean task to get it through. If you get that through, I think we start to see some real thing. But the market is a forward-looking mechanism. Don't miss out on some of the gains that will likely come But if you're scared, just understand we all have different risk tolerances. So go back to that first slide that I showed. Okay, I'll talk to you guys tomorrow. See you, bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.